Hello, my name is Krystal and I'm the CEO of SlipTrade.net. In this presentation, I'm going to explain moving averages trend concept. This is part 2 of the Forex 101 Made Simple series. First, I'd like to start with a disclaimer. Feel free to pause the video and read through the entire disclaimer. But when we're trading Nadex, IG, Forex, or binary options, as with any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised that you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss. Past results do not ensure future results. Understanding the market. It seems as though many traders spend a lot of time seeking strategies with indicators that they can rely on. Unfortunately, this is not the way to trade the market. As online traders, we need to understand the market, what controls it, the best times to trade specific strategies, and risk management. These are all simple concepts, but sometimes we get caught up in relying on sources, indicators, and other traders' knowledge instead of our own. Trading is not something learned overnight. It is a trade, a skill that is learned over time. I like to think of it as going back to school and taking the necessary time to learn and absorb all the knowledge that I possibly can. I feel that there are new things to be learned every day, and in doing so, we keep our minds fresh with up-to-date knowledge and grow into more experienced traders. My goal is to continue to add different portions of understanding the market in this Forex 101 Made Simple series. But today, I'm going to focus on a very simple concept that will help you long-term in your daily trading goals. This portion only includes 3 simple moving averages and 1 indicator, and I like to call this portion trend analysis. First, I'd like to start with a quick intro. I spent many hours watching and learning from a series of videos when I first started out trading Forex. I learned that less is more when it came to having indicators on my chart. At first, I had a really difficult time following this and lost a decent amount of money in doing so. I kept wanting to add more indicators that win and not actually spend the time to learn how the market worked. This was a very painful lesson, and if I actually would have listened to what the multimillionaire trader was teaching in his videos, I would have been in high profits instead of the losses that I experienced repeatedly. It was definitely a learning lesson. The concept was simple, and his goal in teaching what he did was for his students to also pass that information on. So that is what I'm going to do for you. So let's get started. Trend analysis. The concept I want to share with you is trend analysis. It is very simple and a must-add to your daily trading success. We start with 3 simple moving averages. These moving averages are set to 7, 14, and 31. The logic behind this that he explained is that there are 7 days per week, 14 days bi-weekly, and around 31 days per month. We also add 1 indicator, which is your Heikin-Ashi candles. I like to use these on my MT4 or MetaTrader 4 platform. Moving averages. We start by setting the period 7, 14, and 31 to each moving average. Then the MA method of symbol, the style, which includes the color and line types and sizes, and then we choose OK to save. Heikin-Ashi indicator. We then add this to our charts. We choose inputs and set the colors you would like for the bear and bull candlestick bodies and shadows. I like to set mine to dark orchid and medium spring green. Then choose OK to save. What to look for. What you are looking for basically Okay, this is just the start of this, but it's to get your mind going and to start learning to watch for this, okay? You're looking for a change in the trend direction. You can recognize this by watching a cross of the three moving averages and a change in the color of the Heikin-Ashi to match the direction change, okay? In the example to the right, we see two trend changes. The entry would have been where I drew in the red arrows. You see a cross, a change in trend direction, and a change in the color of the Heikin-Ashi. The exit would then be at the change again in the trend direction, which I'll show you on my charts. That's the basics, okay? But let me show you more in depth on my MetaTrader 4 platform. There's obviously more to it than simply following the trend, which I'll explain in more detail in upcoming presentations as well. If you're interested in learning more trading knowledge, great strategies, joining our online trading academy, or checking out our free information on trading, please go to slicktrade.net and we'll see you there. Now, let me show you some examples. Here's my MetaTrader 4 platform, okay? In the left, you're going to see a list of indicators here, right? You'll also see where you can insert indicators here. Insert indicators. And then what we're adding, as I already stated, is your moving averages and go over it. Oh, right here, the Heikin-Ashi. Okay. You would choose insert indicator, and then you choose whatever indicator it is you're adding first. Okay, so let's say a moving average. Mine are already on here. All right. So what I'm going to do is right click and choose indicators list. And you'll see moving average, moving average, moving average, and Heikin-Ashi. When you double click them, this is my 14-day moving average. It's set to simple. And then I choose the style. Choose my color. Choose that line type if you want it dashed or solid. Then you can choose how thick of a line you want. Okay, this is going to be all personal preference. And then you choose OK. You're also going to add the moving average of 7. Again, you want to choose simple, and then you want to choose obviously a different color so you can tell the difference between each moving average. The third moving average is 31. Choose a different color. Simple. Please hold for just a second. That is my cat, Master P. He's a pretty awesome cat. He was found on the streets of Detroit, and took him in, and he's been a member of the family ever since. So, back onto this. The third one is going to be your Heikin-Ashi. And like I said, I like to do the dark orchid and the medium spring green. I like to keep the shadow and the candlestick body the same color, just to help differentiate, make it clear. Like I said, less is more in your charts. This just leaves less to have to look at, okay? So that's what I have mine set to. Again, personal preference. I have my chart set to 15 minutes. You'll find what's best for you. It will also depend on the length of time that your trades are, okay? But that's what I prefer is 15 minutes. And my Candlesticks, since I have the Heikin-Ashi indicator on there, instead of having regular candlesticks, see how that looks a little different? It just looks like there's more going on in the chart. I'd rather not. So I like to choose a bar chart, okay? It helps differentiate it for me, right? That's just my personal preference. If you want to go with your traditional candlesticks, that's absolutely fine, okay? Or if you want to go with a line chart as well. This is a setup that I prefer. So I drew in these two red arrows to show two different changes in trend direction. Okay, what you'll notice is that the three moving averages, they cross first. All right, and what you're looking for is an uptrend. All right, or a downtrend. You're looking for a change in the trend. It was currently in a consolidation period. So you're looking for that cross to occur. You're looking for a change in the Heikin-Ashi candles. Okay, so if you're going into an uptrend, mine is set to the spring green color. That's indicating it's starting to go up. Okay. I wouldn't have taken it exactly here, but that's my first indication. Okay, so be waiting until they start to kind of curve up, which is right around here. Okay, so let me go ahead and draw in. Okay, this is when you see the cross occurred here, and now the moving averages are pointing up. All three of them are. Okay, you would have entered there. 1.09765. All right, and then what you notice is up here, okay, you start to see that the candles, they're pushing down. All right, they're leveling out. You can see a complete change here. It's no longer going in an uptrend. Okay, it's going just along like this. Okay, so here is definitely where you would have wanted to get out. Okay, and again, you're going to want to find the best times of the day to trade this. All right, I personally like either the London session, the London breakout, or the New York session. There's a lot of movement during the New York. Okay, if we look here, we have another change in the trend direction. Okay, you see the cross. You see the moving averages starting to go down. Okay, so probably around there. Let's go back just a little bit here. All right, they're already going down. Right, yeah, so right about there. That's about the entry that you would have wanted to grab. Okay, and if we look at this, whoops, right there, down to there. Okay, and you see that it's leveling out at this point. You could have stayed in the trade longer if you wanted, just to make sure that that was what was actually happening. But you can see here that it's leveling out. All right, so you would have wanted to exit right around there. Okay, let's look at a few more examples. This right here was obviously a big news day. I would have avoided that, okay, altogether, basing it just on these moving averages, okay. I do have strategies that work for news, but if you're going just on these three moving averages, it would have been best to go ahead and avoid that. Okay. So, excuse me. Here's a good example. Your Heikin-Ashi candles changed to green, all right? There was a cross, and all three moving averages are going up, okay? Another thing to look for is for those Heikin-Ashi candles to be above the moving averages, okay? That is something that trader pointed out, that if you wait for them to be above instead of them below the moving averages, the actual bodies of the Heikin-Ashi, then that is a much better entry. Here. So right here is, or actually right here is where it was above the 7 and 14. Right here is where it was above all three moving averages. Okay. And again, you could have followed the trend up, still going up till you get to around there. It's leveling out. However, this is something to think about. And go ahead and watch your charts. Do it on demo. Okay. A lot of the time, price will come back down to the moving averages, but still continue in their uptrend. All right. This one, this pink one on my chart is the 31 day. Right. If it hits and it doesn't actually break down through it, like here, they broke down through it. Okay. If it only breaks through the 7 and 14, much of the time that's still going to continue up. See how this is still going up, this 31 day? It did come down, it did kind of hit it, but it bounced right back up. This would have allowed you to stay into the trend to there, okay? Or, I mean, you can see them kind of leveling out here. So you probably would have waited until right around there, honestly. But you see, you could have collected a lot more pips on it that way by just really paying attention to what was happening with the overall trend. Okay, let's look at a few more examples. Right here, we see the cross. Okay, excuse me. And okay. Now, first we see a cross. We see the bodies of the Heikin-Ashi above the three moving averages. We see an uptrend occurring. I would have taken the trade right around there. Okay, it's actually a little bit high. All three moving averages are going up. They crossed. The Heikin-Ashis are green. The bodies are above the moving averages. And if you follow on up, okay, you see it leveling out. You could have exited the trade here when you see it leveling out, or, like I said, you could have waited to make sure that it didn't break through the 31-day moving average. Okay, it only hit these two. It broke through this one, hit this one. This turquoise is my 14. The purple is the 7 for me. And it continued up. So you essentially could have stayed in until right around there when you started to actually see a change. Okay. I mean, you could have exited as high as there, but when you actually see the change in the trend, it would have been right around here. Okay. It's very important to take profit when you're in profit. All right. Many times we get greedy. I've had that problem a lot, especially in my earlier days of trading and learning. I tried to stay in a trade. Oh, I'm gonna make more. I'm gonna make more. I'm gonna make more. Don't think like that. Try and change your thought process to, hey, I'm in profit. $500. I'm gonna go ahead and exit. All right. Even if that's not the goal, if that's not your daily goal, if you want to make $1,000 a day, okay, you can still take more trades on more currency pairs or indices, commodities, whatever it is you specialize in, whatever it is you find works best for you. Okay, and just when you're in profit, take the profit. Okay, you don't have to just stay in and just, yeah, I'm going to make more. I'm going to make more. Don't get greedy. right? It's very important not to get greedy as a trader. I'm going to show you, let's do like 2 more examples, okay, before I go ahead and end the presentation. But here, I'll actually explain this in some of my upcoming videos, but I really like to base some of my trades off of M and W patterns, okay? When you see the price hit a major level of support or resistance, support is the bottom line and resistance is the top, okay? When you see it hit a major level and you see it form an M pattern or a W pattern, okay, that is a good indication that the trend is going to change as well. I've taken a lot of great trades with that, but again, I'll get into more detail in some of my upcoming videos. Okay, but this is just a nice M pattern that would have been a great trade. Okay. So here we see the moving averages leveling out. They cross to the downside. The body of the Fibonacci is below the moving averages, and it is my purple color, so indicating a sell. All moving averages are headed down, and there you go. It did go ahead and test, and it continued down. These are called levels of rise. All right, when you see this price being pushed up and then it goes back down, okay, it's usually a market maker move where they are trying to buy against that trend. Okay, a lot of times people think that, oh yeah, the trend is going to go back up now. Not necessarily. Pay attention and really watch the charts. Like I said, do it on demo, and you'll see that many times, most times actually, it's going to continue with the trend, right? So here it came down, it was tested, and it went back down again. All right. Again, it was tested here, it went quite a ways up, but that 31-day moving average is pretty strong, so you actually could have exited more so around here when you actually saw that trend leveling out. Okay. Again, let's see what we have here. We had a major, looks like consolidation. Oh, no, it just kind of looked like it. Times aside though. 45. Okay, so this was right around 3 a.m. when we saw this first cross. Okay. Where is New York open? New York would have been right around here. Okay, so we see some little short movements here, basically. All right, and if you notice, it's hitting a major level of support multiple times there. This was during the Asian session, so there obviously wasn't much movement happening here. It usually consolidates during that Asian session. But what you notice is we have the the London open. Price starts to go up, comes back down a little bit, right around New York open. We see price starting to go back up. And then here is where we see our actual change in the trend. Okay, we start to see our moving averages going up. All right, the bodies of the candle are already above the moving averages. Okay, the moving averages are starting to head up. Right about there. Okay, and the bodies of the Fibonacci are green, showing an uptrend. Okay, notice we get up to here. We actually go all the way up there. So there must have been some type of news event or speaker, something to that effect. Okay, so more than likely, if there was news like on this candle spike, you would have exited that trade around here and taken a profit. Okay, once you have a strategy to trade the news, you can go ahead and do that. But if it goes the opposite direction, you see that spike and how many pips that was? It could have gone all the way down, okay, against the trend. News is not something to mess with. You definitely don't want to blow your margin. So I suggest always getting out before news. That's what I do at least. But again, you know, a great way to gain a decent amount of pips there. All right. So there's a few examples for you on my MetaTrader 4. Excuse me. Like I said, I'll be coming out with some more. Oops, I'll be coming out with some more videos soon, and you guys have a great day. Okay.